And I never thought we were going to fail. So this is the new bank, digital wallets, and it's going to be true in this country, it's going to be true around the world.
Known for her unique investment strategies, Cathie Wood, founder and CEO of ARK Invest, uncovers her secret to massive success and wealth.
The way in the early days, in order to help people understand what we were doing, we used to say, look, you may not believe in our forecasts, our exponential growth trajectories, all of which are a function of extensive modeling. But if we're right, your benchmark sensitive portfolio or benchmark aware portfolio is going to be populated increasingly by value traps, stocks that are cheap for a reason. But if we're right, many are going to be disrupted or disintermediated by the most profound changes that have been technologically enabled in the history of the world. And many people will say, okay, that sounds like hyperbole. It is not hyperbole. I founded ARK in 2014 because I saw a dearth of research and investing in innovation in the public equity markets.
One of Cathie Wood's standout principles is her unwavering belief in innovation. Early on, Cathie understood the power of disruptive technologies and their potential to reshape industries and create immense wealth.
I saw that the tech and telecom bust and the 2008-09 meltdown had put extreme fear into our business. And so hugging benchmarks became the safe way to go. We think that will not be the safe way to go during the next 5 to 10 years. And just to frame this up for you, in 2019, truly transformative innovation was the market cap of truly transformative innovation was roughly $9 trillion globally. I mean, $7 trillion. So it was less than 10% of the total public equity market cap. If we are correct, that number during the next 10 years, and this is a revision, it will go to $220 trillion. And in the process of all of this disruptive innovation will be creative destruction. That is the other side of disruptive innovation, the disintermediation, the disruption of the traditional world order. We've never had 5 innovation platforms evolving at the same time. The closest we can come to this in history has been in the early 1900s, telephone, electricity, and automobile. And those did transform the world. They cut across economic sectors, and they were launching pads for more innovation. The same thing is true of DNA sequencing, robotics, including adaptive and collaborative robotics, energy storage, artificial intelligence, and blockchain technology. And not only is each of these 5 platforms scaling exponentially now, the time is now, but they are converging. And the kinds of explosive growth that we believe are going to come out of this convergence can be characterized by autonomous taxi networks. Autonomous taxi networks will be the convergence of 3 of these major innovation platforms: robotics, autonomous vehicles are robots; energy storage, they will be electric; and artificial intelligence, they will be powered by artificial intelligence.
Cathie's approach is a staunch devotion to long-term investing, often holding on to her positions for years. This strategy has allowed her to ride the waves of volatile periods and reap substantial rewards. Cathie's ability to recognize and capitalize on technological breakthroughs has been a key factor in her success. That, and like all financial experts say, starting early.
This opportunity alone, we believe, will deliver revenues in 10 years of roughly $10 trillion globally. Now, the numbers I gave you before were market caps. This is actual revenues, 10 trillion according to our estimates versus zero now. And that's the next 10 years.
With her uncanny ability to spot market disruptions ahead of the curve, Cathie Wood has successfully ridden the waves of volatile markets. From the rise of electric vehicles or the transformative impact of blockchain technology, it's no wonder why Cathie's early investments have paid off.
We were on a mission, and I never thought we were going to fail. Many other people thought we were going to fail. We chose a wrapper that was dominated by passive portfolios,
right,
and put an active strategy in there. And people thought that was crazy. Now, after 2.5 years of no traction, effectively, I began to say, wow, was that a bad move? And so we started doing separately managed accounts and so forth. But it turns out that that was a great decision because so many people thought it was such an awful decision.
Right.
We had so much visibility that when we started to gain traction, when the inflows started, it was like a head fake, and it got us so much more attention than we would have gotten otherwise. We're using spectacular growth rates that no one is expecting, and Tesla was our first proof of concept, I would say, a very visible one, where people were saying, what are they talking about? And all we had done was used Wright's Law, which is the centerpiece of our research, to try and figure out how quickly costs would decline in battery pack systems, and therefore how much prices would fall for electric vehicles and how quickly the uptake would be. The most important call that we made initially with Tesla was, all right, Tesla's battery technology is unlike any other auto manufacturer's battery technology. Tesla was riding down the cost curve of the consumer electronics industry. So laptops, cell phones, huge volumes, right? And when you get a scaling like that, costs come down. It's called a learning curve in the tech industry. So Elon, you had auto manufacturers and auto analysts laughing at him. Elon is building his car on top of cell phone batteries. Isn't that funny? And what they didn't believe was that the engineering was possible.
Right.
So there was they just didn't think it was possible. And he did. And so even today, these cylindrical batteries that he's been using relative to lithium-ion pouch, lower cost and will remain lower cost for at least 3 years, we think, which means that any other auto manufacturer who wants the same performance and the same range at the same price will have to lose money on every car sold. So Bitcoin specifically, we got involved when it was a $6 billion market cap, and here's Art Laffer again in my life and in ARC's life. It was a $6 billion cap then, now it's over $1 trillion, but we were asking the question, this was 2015, could Bitcoin serve the 3 roles of money? And we came to the conclusion that it was possible. Art Laffer collaborated, he tore our original paper up, and as we were going through it, he said, this is the rules-based monetary system I've been waiting for since we left the gold exchange standard, 1971.
Right.
And I said to him, oh, how big could this be? And he said, well, how big is the US monetary base? And back then, remember, this is a $6 billion cap. Back then, it was a $4.5 trillion monetary base. Today, we're at $8.5 trillion. And Bitcoin's at $1 trillion. And that's just one of its roles, I think the most fascinating thing that's happening is in El Salvador. Have you heard? They deemed Bitcoin, the president, who tweets every day, deemed Bitcoin legal tender and sent a Chivo wallet to everyone in the population eligible, so 4 million. 3 million, it had $30 worth of Bitcoin in it. 3 million have downloaded it. Only 1.2 million in that country have a banking relationship. So this is the new bank, digital wallets, and it's going to be true in this country, it's going to be true around the world.
Our lives are going to transform in a way that we can't even comprehend now. Stay away from the creative destruction and move into disruptive innovation.